the single prints, the equivalent of the single prints over here on the spider's cat. We do the same thing. We can just bring this down to a 30-minute time frame chart. We'll suffice for now. Ignore this lower wick. That's a bit of a wonky print, to say the least. But your single prints are right here. And single prints are right in here. So underneath 523.75 comes down into about, what's the number? The top end of yesterday's consolidation range. If you want a helper level, we can throw it in. I'm always a little bit skeptical of getting overly level happy. You guys know that. I've been here for a little while. It's 500 flat. 500 flat. Let's do that. Let's go 500 flat. Let's drop this back for a dip gray level. And let's get the job done here this morning. Yeah, it depends on your chart. Depends on the time frame you're using, on the data provider you're using. It's probably phantom print for some unknown reason. Regardless, 500 is that line in the sand, the single.
Do something that looks like this and leave it like that. So you've got some helper levels in here, but I wouldn't mortgage the house on 511.50 anymore. So 523.75 is your key hold on a pullback. Once again, opening print somewhere in here. If we pull back, maybe if you want to try to take the short to get there, be my guest. When and if we get here, it's all about spotting whether or not the market wants to produce a higher low over the neckline of the double bottom. If that's the case, it would start to confirm that the capitulation low is in, and we are looking for a more constructive move out of the market back in the upward direction. If we fail 523.75, the same concepts apply that we just talked about in the ES futures, right? We open here, we look below and fail, rocket fuel to the upside. Big upside move if sellers get trapped and we confirm a higher low back over the neckline of the double bottom, not revisiting this low, reinforces the fact that sellers failed on the gap down. This was capitulation on the Monday morning open, which makes the most sense if you think about the sequence and the timeline, right? Everybody panics into the end of last week. Oh my God, the market's gapping down. We're down over 15% from the all-time high. We're going to gap down on Monday. Mom and pops call up their brokers, say, get me out of this, liquidate my 401k. Little pop, and that's it. When everybody sells, that's the bottom. Remember that market, from an auction theory perspective, markets bottom when the last seller sells. The LSS, the last seller sells. LSD, limited slip differential. Anybody? No? No need for some off-roading references here with 9:13 on the clock. We'll talk about building trucks, building Jeeps at another time. The conversation here spans the full gamut. Let me tell you. So 523.75, it's your top watch. The timeline makes sense for this acting as a capitulation low. If this holds up, then there is no reason to believe that we are, oh my goodness, market crash again, new lows, right? So that's that. Let's jump on over to NQ futures. Let's see what's happening with the nasty NASDAQ 4-hour time frame chart. Obviously, we know it's going to be a very similar analysis from the top-down perspective, 4-hour. Here's your double bottom. We know there's a neckline here. As long as we're over it, we are maintaining the bullish stance. We do have single prints in here. Let's see those on the 30-minute time frame chart. We'll go hourly, but then bump down to a 30. Here it is. Let's take a look. And there we have it. You can see there's the single prints out of the NQ. If we get a pullback that goes through that level, the number, 18,250 for round number's sake, all right? 18,250. Sear that into your brain for today's session. If we're over 18,250 on the NQ futures, no reason to panic. Capitulation lows are holding. If we're under 18,250, it's all about whether or not this is a partial single print close or a full single print close. Just like the ES futures, the risk is if we're underneath 18,250, it technically starts to become a little bit of a look above and fail. And as long as this holds as a lower high moving forward, that's your danger for, oh my goodness, bottom end of the range is the target, and it's not over yet. All right, so first thought, base case. I made a point of saying that we're going to try to use this more so moving forward because I think it helps clarify. The base case analysis here walking forward is that this is a double bottom. Yesterday broke out over the neckline, and it would not be unreasonable for a retest of the neckline. When we get here, we will be eyes on looking for a hammer on the hourly chart. We will be looking for 5 and 15-minute inverted head and shoulders, double bottom, any signs that buyers are stepping up around 18,250. That's what we're looking for as the base case. If that does not happen, if we just see straight up red bars that start looking like this, then what we do is we morph the base case into saying, we'll first look for a lower high and then the rotation to the downside. It has to be. You're getting a look above and fail on the balance range. If that base case also breaks, and I know there's a lot of failures to keep track of in here, but it's all about gauging the response off of 18,250. If we move like this, that's the rocket fuel for the upside, looking to close the gap overhead. This gap actually, honestly, can just get removed off the chart. Look at that. We're clean. We're getting clean. Let's go to the hourly, and let me actually make sure that there's not a intermediate level we should care about. There is, which would be those highs. So this is always good just to double check some of the reference points. Let's bring this in here, and let's just bring that out. I'll manually bump that to the end of the month, April 30th. Thank you very much. Come again. Great. All right. Even on the hourly chart, I mean, you can see the structure is clear as day. Here's the double bottom, extended hours turned off, retest of the neckline. That's where you're looking for the higher low, right? You could imagine how you have lows, higher lows. This would be the next ideal higher low in the trend count, right? Let's go back to a 15-minute time frame chart. Let's turn the extended hours back on. Let's take a look as to whether or not we're opening in range. Of course, we are. Very similar to what we had over in the ES futures, 9:16 on the clock. I'm keeping an eye. If we're thinking about the framework, we're opening in range. We're opening technically in value, but just by a hair. Value did not skew higher out of the NASDAQ. So in range, technically in value, almost above value. I would really be using the 19,000 flat level. If we're over that, that starts to become a little bit more like euphoric consolidation, maybe looking for follow through. In terms of the overnight range, here's the low, here's the high. We're opening closer to the lower third, which is okay, a little bit more neutral to bearish. Overnight inventory, just like the S&P 500, probably skewing a little bit more net short. Let's go 80% on that. So what does it mean in terms of the pathing? Well, in here, I would just sort of keep an open mind to anything goes, right? That is going to be over 18,625, but under 19,000 flat. This is consolidation. This is where I would put my patient hat on, and I would look for travel trades that exit this to do something in the market. Now, Quick Draw McGraw can probably look for the short scalp underneath the overnight low into the big bad level we just described at 18,250. But when we get to 18,250, once again, if this is the range and we do this, Quick Draw McGraw can get there. But I would think that the better opportunity is looking for the long off of this, and then some sort of brigade bolt over 19,000 flat gets you to your previous day's high. That's the euphoric follow through to the upside. Consolidation that breaks out of the range here, you could target that, but please make sure there's a no-brainer stop associated with this. You're sort of getting involved. Remember, just like we don't want to be short in a hole at the very bottom end of a move and you're looking for a failure pattern, you're actually doing the same thing after a huge move to the upside. Again, up 12% on yesterday's session for the NQ. So it would have to be a no-brainer stop loss in here if we're going to retarget previous day's high and then look for potential follow-through beyond that. Otherwise, the risk just doesn't make sense. Any sort of pullback to get down to here, and now all of a sudden, where do you put your stop, right? So make sure there's a clean stop if you are going to get involved near the highs on the long side. If the market falls underneath 18,250, again, base case has to flip and say that we should be thinking about a single print retracement down here towards what's the number? We have 17.6. 17.6 would be the downside figure for your single print retracement. All right, that is what we've got out of the NQ. That is what we have out of this analysis. 9:19 on the clock here. Let's see if we can't get the job done and jump over to the QQQ Cash ETF real quick, see what's happening from this perspective. Rinse and repeat, but your numbers are slightly different. What do we have? I would start thinking about... I would actually bring this level back up. Let's remove that guy. Well, no, let's keep this guy. Sorry. Let's remove, undo. Then let's add this one in right around in here because that's that consolidation zone that we were just referencing over on the NQ futures, right? So anything that just sort of consolidates in this little zone right here, it's rinse and repeat of the exact strategies we just talked about on the NQ futures. Consolidation, brigade bolt underneath brings you the pullback into the neckline here of the double bottom. 441 is the number. This is underneath 453. If we're over 457.50, looking for upside into 465.85 on the upswing there, previous day's high, right? Understand that this is where you need that no-brainer risk-reward entry, okay? That's what we've got. If we fall into the single prints, it's underneath 441. The single print's technically closed to the August 5th low. That's your high of the morning consolidation from yesterday. That's at 424.75. 424.75. All right. Let's move along. Quick check of the Russell. What do we see out of the Rusty Rut? They're already... Actually, the Russell didn't even. Let's say that. Let's start with the Russell didn't even make the break up and out of the range. It more so just made the move to the equal high at the top of the range. So you had highs, highs, highs. This was a lower high on the Tuesday session. So we are pulling back and we are getting a little bit of a response here over the single prints around 1850. I would watch that for small caps. Small caps might hold the key here, right? That's the classic saying. Go on X, search up small caps, hold the key. You could draw the little cap emoji. Oh man, God. I love the drawings, but I just know it's eating up some critical time here. This is like a baseball hat, maybe a baseball hat, and then small caps. I guess it would be the small emoji. I can't resist. I've got to resist. We don't have the time. It's 9:21. If we're over this 1850 mark, then I suppose that keeps things neutral and afloat. If we're under and closing the singles, I would certainly be thinking about, at minimum, pulling back to test the necklines over in your S&P and your NASDAQ. All right, so watching your Russell as being the item, the index that holds the key. That holds the key. Spam on a Stick says that was definitely a igloo. Perhaps. Rebecca F., have a green trading session. Thanks for coming out to the show, as always. We did not go over Tesla yet. We're working our way through the core list of companies in just a moment. Here is the IWM Cash ETF. 182.50 is your big bad level, right? This is the equivalent of that 1850 that we just talked about over on the Rusty Russell futures. If we can hold up over it, again, this is maybe your saving grace that says, okay, we're just kind of neutral up here, thinking about patience and looking for upside. If we fall underneath the 1850, that is your danger zone, and you're at least looking for neckline retests out of the two other indices in there because of the divergence that the Russell is suggesting. Okay, that is at 182.50. All right, let's jump on into the core list of companies here. This is going to be, it's going to be rinse and repeat. So all the concepts we've talked about so far for the broad market will apply to the core list. We are looking for pullbacks from the highest high in the reversal out of the hourly double bottoms for retests of the neckline. So we're just going to go over numbers to make sure we can get the job done. Pullbacks that stay underneath 114, you're looking at 110.85, 107.15, then 104.75. I would start entertaining long ideas. I would be looking for buyers in this zone down here. 107.15, 104.75. Those are the two numbers that I would be mostly focused on. If you want to look for a look above and fail over 114 with a lower high underneath, that could kick off the risk reward to the downside along these lines right here. All right, that's that. Let's move along to Microsoft. Softy, of course, really impressed actually with some of the things happening on Softy from a daily perspective. I mean, there's still an, it would have been best for the sellers to reject here at 377.25. That clearly did not happen. So any pullbacks on the daily that offer a higher low over 377.25, except prices back inside of this upper range, that's pretty bullish. That is pretty bullish. All right, so watching very closely 377.25 as the key level. That's where I would want to see prices hold as the do or die. But you can see here as well, 385.50 can offer a higher low over the dividing line of that previous range. Let's go back to the hourly. Let's take a look and let's see what we can't see. There it is. There's your dividing factor back over there. Okay, so 392. Look above and fail on that. Anything under 385.50 gets you to your 377.25. That's your top watch for longs. If the buyers can hold up there, rock and roll. If they can't, then obviously the weekly cliff at M365 is back in play. At FIL, 9:23 on the clock. We're getting it done. This is just a balance range. If there's any bearish headlines that strike today, Apple is the place I'm looking to short. Apple is the most relatively weak name that we have out there in the market. You can see the highs up here did not close the gap. You can see that this is not really a clean double bottom. This was a lower low double bottom versus the higher low double bottom that we had at the index level. So yeah, I mean, you can see we're opening here 189.25. If the market is going to rally, I would need the broad market to be strong if this is even going to be an entertainable idea for this long risk reward here. It's an idea. It's something that you can think about. You can think about this higher low on the pullback this morning, but I would just I would look for a stronger name, honestly. Speaking of, let's take a look at Nancy. If Nancy pulls back, which it is in the pre-market, notice that we're just over 184, great brigade bolt, right? The premise of all these trades is that you're brigade bolting over the neckline of a double bottom. Here's your double bottom. This was actually more like a mosquito pattern, as we know. And over the neckline, brigade bolt, higher low 184, changes the structural trend in the upward direction. 184, all right? 192.25, very clean area of resistance based on this overhead supply. Google. We've got 9:25 on the clock. Let's do it. You can see the double bottom. You can see the higher low. You can see the neckline. Looks like 157 might act as a little bit of a contender first. I would like to see, and this might actually be a more tradable short if the broad market is weak out of the gates. If we do go for that pullback, I would watch Google. If it can pop over 157 and then set a lower high underneath, this short-term Brigade Bolt accomplishes the entry to get to the longer-term Brigade Bolt, which is here, right? So it's the same thing. We're still using 150-175, but because we have this push over the level, if this fails, now we actually have an actionable short to the downside, right? You have trapped buyers who might close out underneath that 157. Okay, still thinking about longs when and if the pullback takes place, but the pullback is more tradable out of something like Goog. Let's take a look at the metaverse. This is, it's actually in the zone, so I would say a similar comment over here, where 574 can act as your helper level, primarily coming from the historic double bottom back here. Historic just meaning older. Not that it was monumental, but just historic. So any consolidation in this zone, I would say this Brigade Bolt can go thin structure retracement under 574, targeting 550.50. If that doesn't float your fancy, if you're like, no, I don't want to short the market, then this long is what you would look for on the swing. Any acceptance over 586, and we might have that lockout rally in the upward direction. Becomes a little difficult to nail an entry on the highs there. Let's move along to Tesla. And let's talk about this got a double downgrade, I think the price was it this morning. Regardless, it's still holding up over the 250.50. I would need to see that act as support here this morning. I do like the fact that it's pulling back. I would like to see the double bottom neckline retest. I would like another re-entry opportunity here for risk reward back up towards the top end of the range. Show me the money. Show me the money. If we could pull off something that looks like this generally as a range to exploit, very interested. So show me 250.50 and we'll entertain longs off of that. If we're just sort of noodling around in here, if there's a higher low that forms that's arbitrary away from 250.50, I would treat this as bull flag on the hourly, trying to seek 286.85 on the upside over time. With about 3 minutes to go until the bell, we're almost there. JP Morgan earnings tomorrow morning means that this is not an options candidate for today's session. Your IV is going to be through the roof on top of what's already happening with all of this madness. Probably staying away. Any consolidation up here, though, is constructive. It is constructive for a higher low over, I wouldn't call this a double bottom neckline, but of course, highs, higher highs, higher highs. If you could stay over the last high in the sequence, right, Brigade Bolt, great. Looking for the gap to close. We'll see what the reaction is from earnings tomorrow morning before the bell. Last but not least, Netflix's chart is a little not fond of this. It might just be because of all the chop that's really taken place in here. The ranges are fine, don't get me wrong. We're talking about, a 50-point range in here on a nearly $1,000 stock. But I don't like the structure so much. I don't know, consolidation maybe turns into a bull flag and then over 950.25, I think I would be a little bit more confident because of the way that we know 950 is the neckline of the Head and Shoulders from back over here. All right, that is what I've got for you in today's episode of the Pre-Market Prep. We managed to get through it all as we typically do. Well, where there's a will, there's a way. Let's take a look back at the ES on a 15-minute here. Any big updates to bring? Not really. Oh, this is the rut. Let's go back to the ES. Any big updates? No, just sort of consolidating out on the volatility from the 8:30 CPI report. Mostly sideways response in there. Remember the FU scale. We would need some really, really positive news if this market's going to fly high again. Basically, the market just got one of the most euphoric headlines it could receive, and it's going to have to beat that in terms of expectations if markets are going to fly high. So the game plan still persists. We will look for pullbacks down to this area to possibly buy the higher low around 5,300. We want internals to confirm. We want to see price action confirm here as well. If that takes place, we're rock and roll to the upside. If we just get this, it might be a little difficult to participate in the upside, but it is bullish nonetheless, and I would not be trying to arbitrarily short this up in the upper distribution from the single print divider from yesterday's session. That's going to finish it off for today's episode of the Pre-Market Prep. Big shout out to Alex G in the chat with the 5 gifted memberships just a moment ago. I think we also missed, we had Antonio joining as a floor trader. We had Lawrence Smith joining as a floor trader, and we had Bill T. Don't mind me, carry on with the 1999. Marcus James Reed with the 5, made a small fortune on RH yesterday, so I guess I can afford some foam for the latte. Appreciate that, Marcus. Hopefully you have another fantastic trading session. With that, I am out of here. Have a green day. Big shout out to all the usual suspects. And of course, we will see you here tomorrow at 8 o'clock again for another episode of the Pre-Market Prep.